All right, guys. I hope you're doing well. James here from jamesforsythe.com. I know we've talked a little bit about user adoption for central bank digital currencies, but we haven't really talked about maybe some actual statistics of some potential demand and stuff for these, right? And so s- some of the central banks have actually done some studies, and we'll head right over to there whenever I can get the screen share up. It's probably helpful. There it goes. Sorry. Quick malfunction with the streaming service. But let's see, I'll put it down here so you guys can see better. All right. So before 20, most of the research that has been done with central bank digital currencies, at least from what I can tell, because actual like academic citations give the year typically, most of them were in 2020 or 2021, at least from the ones I've seen. Maybe that's just because, I mean, as you can tell, even in this first paragraph, you got one, two, three cited from 2020, and here's two cited from 2021. Like maybe that's just where they're using them. I don't know. But anyways, during 2020 and such, although cash circulation was growing, it its use for payments had been declining in most countries, and the number of ATMs falling. And they give the citation for that paper, which I'm actually kind of interested in. Probably read that paper actually, and do a video on that one too, because that seems like something that'd be pretty applicable to this stuff. But anyways, at the end of 2019, cash holdings per capita ranged from around $500 to $7,000 across jurisdictions, mostly the jurisdictions of the central banks that do these white papers. So like, and we'll get into some charts to give all of them, all the countries involved. So like Sweden, some European countries, the United States, Canada, and a few others. I'm just gonna wait until we get to the actual thing so we can list all of them at once. Um, so that being said, while bank deposits per capita varied from 20,000 to 100,000, without a strong correlation apparent between the relative levels of the two variables across the jurisdictions, right? And so basically, they're trying to compare cash and bank deposits with a CBDC, right? And kind of if a CBDC, a central bank digital currency, were kind of implemented into the system, how would that interact with cash and bank deposits? Because that's really what the system is now in terms of consumers and individuals. That's pretty much all they have in terms of what they can use to buy things, right? Really. Obviously, they can invest in things like that, but we're talking about what can they go to the store and use to buy things. Typically, those are pretty much it. I mean, there's credit and stuff, but still, not really what we're talking about. And a lot of this too is from the lens of financial stability, of which we'll get much more in depth in the next few videos throughout the week, and how all of this plays into financial stability along with those considerations, right? So, for example, the potential demand for a CBDC is still highly uncertain. They do have some data on it, but not a whole bunch, at least as of this paper. And so demand would likely depend on the importance to individual users of the following factors relative to available alternatives at the time, such as cash, bank deposits, e-money, and other tokens. So some cryptos and things like that, right? So perceived safety. Um, we've talked about this rather in depth from previous videos. Ease of access and financial inclusion, interoperability with the speed of alternative means of payment, technological innovation. Example would be programmability. I don't know why I have trouble pronouncing that word. Remuneration, cost of use, privacy and anonymity, and ease of switching between CBDC and alternatives. All of these have been kind of subject to previous videos, all within the playlist that you can find on the channel for central bank digital currencies, just kind of going through things, not necessarily one by one, but touching on them here and there. Some of them have their own videos, specifically like the technological innovation and interoperability as examples, right? And so, as always, kind of all of these are features of a central bank digital currency, right? And so you'd basically have, and with each jurisdiction, it would be beneficial to have kind of a different set of those, right? So kind of think of it, these are the attributes. Say you're like building out a character or whatever in a video game. They all have different attributes. And then basically your how much of each attribute would be beneficial for each jurisdiction, whether it be country, maybe even state, whatever it happens to be, and however they decide to break this up, right? And so this also depends on like the extent to which cash has already been kind of pulled out of the system or into the system, because that's one of the things that's been talked about a lot relative to this topic. Would be like, is cash still a thing? They've explicitly stated throughout these papers that it's not their intent to get rid of cash as long as there's a demand for it. But again, that's just these papers. These are discussion papers. So who knows? Um, they'd probably even or might even ban cash for specific reasons that we will get into much later because we talk about it much more in depth later in the paper, and will actually probably be on a separate video in and of itself. Right. So here are the kind of graphs which I thought were kind of interesting. So basically, what they're breaking this up into is Canada, the Euro area, Japan, Sweden, Switzerland, the UK, and the US. Right. And so here we have in the shaded areas our bank deposits, and this is on the left-hand side, which I mean, it's just an order of magnitude, so you can add a zero, so at least it's scalable, right? Then on the right-hand side, you have cash holdings and then monthly income. So like how much cash people are holding, and then how much monthly income do they have in general. And so this is just one of the things I thought was interesting. I can see where there's no, they say not much of a correlation, but I just still think it's interesting to look like, where this stuff is. So you can see like kind of how people on aggregate total, or I guess per capita, hold their money, right? Hold their value. So like with Switzerland, they have a lot of bank deposits, and then they have cash and their monthly income, but they hold more cash than they have in monthly income, right? So say you make like 5 grand or whatever a month, then they're holding like 8 grand in cash. Just relative numbers, obviously. I guess it doesn't really have to be relative numbers. If they're well, it's about 5 grand or so, 4.5, 5 grand of monthly income, and then 6 in cash, right? For some reason, I was just throwing off random numbers to show a concept, but they actually have them here. Anyways, brain fart. But in the UK, it's opposite, where people hold less cash than they do monthly income, and also to a much lower degree, right? And so I just think it's interesting to see how it kind of varies from country to country. Maybe not necessarily with I don't know, correlation. But on the second graph, to be completely honest, when I was looking at it, I was confused at first, and it was kind of hard for me to get where they're talking, like where they're going with this one. So what it seems to me would be like this is the potential for household like CBDC adoption, right? And so basically, this is as a percentage of bank deposits. And so it's basically the spread of all the countries on what they think would be the adoption for CBDC relative to bank deposits. And then they split this up into di- 3 different kind of scenarios for demand. And so, like this first one, they call monthly income, and then it's all substituted from bank deposits. You can see here. And this one's a demand where it's 3,000 and split 50-50, and then this one's just monthly income. So I'm assuming these are just for basically they're thinking about like the percentage of central bank digital currency adoption relative to um, where it would substitute. So basically, it says no split, and so this is basically if it would just change the uh, ba- bank deposits. Sorry. So if this was just bank deposits, that's all they were substituting. This is what they think this kind of distribution would be. And now if they split it 50-50 between cash and bank deposits, it's much lower, right? And so I'm assuming with the demand equals, and then this is just kind of a number to give it kind of to compare them all apples to apples, because this one where they're saying demand equals monthly income, Um, that's relative to this blue dot over here, and so that's different for all countries. So by having demand equal 3,000, kind of like right around here, where you have Canada, excuse me, Sweden, and the United States are all kind of around that number. So it kind of, I guess, normalizes all the countries to kind of the same, kind of like an index, to make it relative to one another. Whereas this one's more kind of absolute terms, right? So just kind of, I guess, main takeaway would be if a central bank digital currency were to be implemented and it were only to substitute demand deposits from commercial banks, then they assume they'd have much larger adoption. It seems saying this is at top 6% and this is above 12, so at least twice as much adoption, kind of averaging out among them if it was just with bank deposits, right? So interesting kind of play, I guess, and a lot of this has to do. It seems to me that it has to do with the fact that they're worried a central bank digital currency, if it were to be implemented, would kind of mess with the stability of the commercial banking system. Basically, the CBDC would compete with commercial bank deposits as a form of digital money, right? Because it's essentially kind of the same thing. I know it's not. Trust me, there's 19 or something other videos talking about how they're not the same already on my channel. I'm saying like there'd be money in a digital form, and from the perspective of kind of the average individual who doesn't care, who doesn't, no one doesn't care about like who their counterparty is, and all they know is they have a bank app or something on their phone. They can see it, they swipe their card and go. That's all they care about. That's all they want to know. That's all they want to understand. They just want ease of use, whatever. Um, and that's pretty much it. So I think that's where they're kind of going with this. And whereas it gets a little more concentrated when you throw cash into the mix, because people, even that kind of average person, already makes that distinction between cash and commercial bank deposits. And it's like, even I guess in my personal situation, like the stuff I use cash for is significantly different than what I'd use my bank account for. Like my bank account for is wow, my bank account is for um, like regular transactions, day to day stuff, and I basically use cash for like large purchases in a way. Like if I'm gonna go buy a car, I'm basically gonna just show up in cash for the most part, right? Just easier, I think, at least. And there's also like, I mean, I'm also not the average person, and I actually like think about like who's the counterparty, and I literally like even like my liquid assets or whatever, I diversify counterparties accordingly, right? At least that's how I think about it. But anyways, not to get too far off topic. So, if a CBDC were intended as a means of payment rather than a form of investment, then it could pay an uncompetitive interest rate, negative interest rates, for example, to avoid undercutting bank deposits in jurisdictions where interest rates are negative, or be left remunerated. I don't know why I have trouble saying that word. But, anyways, this I think has a lot to do with this graph, especially with commercial bank deposits. Because, I mean, like, again, they don't want the CBDC to compete too much with bank deposits, especially if there's a place or in places to where there's negative real interest rates, like the Eurozone, to my understanding. I don't remember their exact. I think even their nominal interest rates are negative, or at least they were at some point in the recent past. But I'd have to cross-reference on that. I don't pay too much attention to the Eurozone in that respect. I've looked a little bit into their monetary policy, when they were kind of somewhat when they're when the ECB's actions were kind of relevant, or not relevant, that's not a good word for it, were similar to that of the Feds, right? But I haven't been paying much attention to them recently. More for the energy stuff at the moment. But anyways, negative interest rates is a huge consideration with central bank digital currencies. So, according to this other paper by Lee, so remuneration is one of the most important attributes that affects the potential demand for a CBDC. The magnitude of the demand would still though depend on a range of factors, including safeguards, which we'll discuss in a separate video, more in depth, I should say, and convenience factors such as ease of use and digital wallets and such. Like I was talking about, with like people don't really distinguish between, or most people would not distinguish between central bank currency and a central bank digital currency and their commercial bank deposits if they kind of if you use them in a similar fashion. So if it was basically like a central bank digital currency was kind of a parallel system in a way for regular people as a commercial the commercial banking system is now, most people could give to anything about it. You probably know the saying, and I don't want to say it because of YouTube. But anyways, um, at least not when I'm not heated. I won't cuss. But anyways, it would be attractive to households that are particularly risk averse or have already spread deposits across multiple bank accounts to minimize balances above deposit protection limits. The business might also wish to transfer and so on, right? And this is where we start to get into more kind of data. So they say some studies have shown that demand for deposits is relatively insensitive to interest rate differentials between banks due to demand inertia. And for this, you go to a footnote, and they found in a 2015 study that a 1% increase in the bank deposit rate was associated with an increase in the stock of deposits of around 0.3% over 12 months. Because most people, when they have them in their, are the money in their bank account, they're not really thinking about interest per se. At least nowadays, where interest rates are so low, at least from my experience, and someone else. I mean, I just put out a video what I'm doing with my own kind of like with most of my savings, um, because the interest rates are so low, and it's basically just rolling them over into short-term T-bills and other things, and kind of using a little bit of play money to get some experience and understand how that stuff works with treasury auctions and stuff, just because I think it's interesting and that's what I do for fun. So, anyways, to continue, Lee in a separate paper uses Canadian household survey data to quantify the expected demand of CBDC by households and estimates that households could hold from 4 to 55% of their combined cash and deposit holdings in CBDC depending on the features of the CBDC. So, in particular, the lower estimates would apply if the CBDC had more cash-like features, while the higher estimates would likely reflect a CBDC designed with characteristics that made it competitive with bank deposits, right? And I think that's because kind of I guess the positive attributes of each one are different. And what I mean by each one, like between cash and bank deposits. And so, like a lot of the reasons, like people like to use cash is because it's physical in your hand. At least that's why I like to use it for certain things. It's literally a piece of paper I can hand to you. It's final settlement, done. I don't have to deal with anything, right? And now, with commercial bank deposits, I mean, you gotta like, I mean, now you have like Cash App and other things you can do as well. But there's a little bit more into it between just like counting 20 bucks and handing it to someone and you're done, right? And also just from the digital perspective, that it's a central bank digital currency, it's much more similar from the end user's perspective to commercial bank deposits, and so there's not much of a barrier. And so basically, it would make sense that if that's where the substitution is going in, meaning the central bank digital currency is substituting bank deposits, it would have a higher adoption rate because it's much more similar, right? Whereas with cash, there's more of a kind of how to describe it. There's more friction between the pros and cons of the actually using that form of money, right? And so, like the advantages of cash are that it's physical, and a central bank digital currency is not, right? It's digital still, and so there's that into it, and so there might be lower adoption. So it's kind of weighting that within this range of 55%, right? And a lot of this too, um, in terms of hard data, like hard numbers and such, is because there's not much of it relative to what you can typically find in any type of scientific community. But at least from my understanding, So, and this is where I didn't know, like, the Bahamas had some version of the central bank digital currency too, apparently. So they said in the coming year, data should start to become available on the rollout of some early CBDCs, notably the Bahamian sand dollar launched in October 2020, and the digital yuan currently in pilot testing. I mean, I knew the digital yuan, but I had no idea the Bahamas were doing. I'm assuming it's the Bahamas. I mean, it's what makes sense to me. I haven't been to the Bahamas, so I haven't seen them in person using that, but that's what would make sense to me, right? So, with that being said, kind of going a little bit more in depth, specifically with the graphs, I think they're pretty interesting. So if you guys want to check out the source, as always, the link's always in the description for all the videos from whatever source I'm using. So you can go in there, check those out. Um, and also, if you guys see anything specifically with the graphs, if you kind of study them more and have like a different takeaway from me, or maybe you see something that I didn't say explicitly um, in the video, please feel free to share it in the comments and have a discussion about it. That's what the comment section are for. And like again, like especially if it's constructive and like with data related and the graphs and stuff, like that's the stuff I enjoy talking about and really kind of seeing the graphs and getting a you getting crafting a data-driven point of view, right? So if you guys have any input on that, please feel free to talk about it. It'd be very much appreciated. I like talking about this stuff if you couldn't tell. But anyways, I'm gonna leave it there. So I hope you guys have a good night, and I will see you on the next one.